If you use your car for business, you can deduct part of your driving expenses, but only if you track your mileage the right way. And that's where most people make mistakes. To qualify, the IRS requires a mileage log, meaning you must record your trips as you go, not guess at the end of the year. Each entry should include the date, the starting and ending mileage, the business purpose, the destination. You can write it in a notebook, a spreadsheet, or using an app like MileIQ, Everlance, or QuickBooks Self-Employed. For 2025, the standard mileage rates set by the IRS are: business use is 70 cents per mile, medical and moving for active duty military is 20 cents per mile, charitable organizations, that's 14 cents per mile. These rates already include costs like gas, maintenance, and insurance, so you don't need to track those separately. Let's say you drove 6,000 business miles this year. At 70 cents per mile, your deduction would be $4,200. But keep in mind, commuting miles don't count. Driving from home to your regular office isn't deductible. Only trips directly related to business, like client meetings, errands, or supply runs. There are two ways to claim vehicle deductions: the standard mileage rate and the actual expense method. The standard mileage rate, you multiply business miles by the IRS rate. The actual expense method, you track your real costs like gas, maintenance, insurance, and depreciation. Depreciation represents your car's loss in value over time. It's calculated using MACRS, which stands for Modified Accelerated Cost Recovery System. This is the primary depreciation system in the US for most tangible property. It's an accelerated method that lets businesses recover an asset's costs through yearly deductions over a set recovery period, usually 5 years for passenger cars. Typical MACRS rates looks like year 1, 20%, year 2, 32%, year 3, 19.2%, year 4, 11.52%, year 5, 11.52%, year 6, 5.76%. For example, you can buy a $30,000 car for business. Year 1 depreciation is 20%, or $6,000. If 60% of your driving is for business, you can deduct $3,600 for that year. Then apply that same business use percentage to your other expenses, like gas, maintenance, insurance, and total them for your deduction. A good tip is take a photo of your odometer at the start and end of each year. It helps verify your total mileage if the IRS ever asks. Here's a quick summary. Track miles as you go. Use the 2025 IRS rate, 70 cents per mile for business. Separate personal and business use. Know how depreciation fits if you're using MACRS. Mileage deductions can save you thousands, but only if your records are solid.